What is up, traders? Mike here with another market review. And before we get started, if you are interested in getting funded with up to $400,000, make sure to visit GYLDtrading.com. You can also use code GYLD20 for a 20% discount on all our challenges. Now let's get straight to the video. At this low, or here, people would be looking to, like the breakout traders, they would be looking to short upon break of this or this. And then the pullback traders, they would be looking at this pullback, into some levels of resistance. They would be looking to sell there as well. And where would they put their stop losses? Well, above the previous high, right? Because that's what everybody does. So around here. And after everybody's done selling, after people jump into breakouts, chasing the market, getting FOMO in, and after people get in the pullbacks here, we have a very nice consolidation, a tight consolidation before an impulsive move up. And generally before an impulsive move up or down, before any impulsive move, if you get a tight consolidation, the longer it goes and the tighter it is, like the smaller the range, the better of a support or resistance level it generally is. So if you have a very tight range that's not moving anywhere and then you have an impulsive move up, that's going to be a very strong level of support. All right, so that's something I wanted to discuss. Overall, we are still looking at these highs here. So if we do have some pullback in the upcoming days, maybe these levels of imbalance, these levels, generally anywhere below the midpoint of the move up, below the 50% would be ideal. So levels like these would be ideal. But these levels also could provide some support and opportunity, like this previous high, for example, right? So here we have the euro dollar. This is very much the same. Once again, we have trapped buyers here, so it's the same but reversed. As you can see, we have the breakout here. People will be chasing that. Then we have a pullback into levels of support here. Very nice looking opportunity for potential buys. However, price broke below, even gapped here. So anybody with their stop losses here would get slipped and end up in a big loss. However, after the break of structure right here, price pulled back once again, as with the dollar, into a level of resistance right here, the previous higher low, and it broke the structure lower. So we have the same story as the dollar index. We would be looking for some pullbacks, and we're looking to take price lower over here. These previous lows, very reasonable targets. All right, so here we have the pound dollar. The pound dollar I'm still not liking. Like, look at this consolidation. We've been in here since 2023, pretty much not moving anywhere besides just spiking out of the range. Every break was a false breakout followed by a move back into the consolidation. So the pound dollar, not expecting this to be good for some period of time until we get out of this consolidation. Like the daily is ugly as well. So this one we might even remove from the market review for the time being. Okay, so here we have the gold. The gold, we discussed that we would like to see pullbacks into some major levels of support, and for that we would need to break below here. Since this is still our current range, we are bullish and price is likely to go higher, but we have to understand that we are pretty overextended and the move up is slowing down. If you compare these moves, it's a big move. Not a single bearish candle pretty much. Then we have a small consolidation, not even pulling back. It's not going lower, not making any lower lows. Then another big move, even bigger. But there's some bearish rejection at the end. And then we have a pretty strong pullback. And then the next move, it's choppy and it barely makes a new high. It doesn't even close above the previous high, right? So this is how you can gauge the momentum of the market. You can compare the moves in size, in the amount of candles, in the size of candles, and in the general momentum. So this shows us that the market is slowing down a little bit, and we are getting some sequence of lower lows, lower highs on the lower time frame. Maybe the 4-hour or the hourly we can drop down in a minute. Right, so we have a nice level of resistance here. And if you think about this, what do we see? We see a tight consolidation and then a breakout. So people looking to trade the breakout would be getting in, and then the pullback on lower time frame. Let's take a look. Right, so the breakout traders would be getting in, the pullback traders would be getting in. In the end, they both got trapped. We have a very nice last bullish candle before a break below. So this should be a very strong level of resistance and something to look out for in the upcoming week. And if we do get a pullback, why is my thinking not working? Okay. If we get a pullback into that candlestick, that zone, we could be looking to target these previous lows. But overall, we would like to see some prices lower on the higher time frame before we can resume buying with the higher time frame trend, right? Okay, so here we have Bitcoin against the dollar. We were looking at this previous high here. We did not hit that in the last week. We did not even make a new high compared to this. And we actually moved lower. However, there is no impulsive moves. It's pretty much just still part of this consolidation. As long as we do not break below impulsively, we're still within this approximate area or range. And we would be looking, the closest level right now is something like this level of imbalance. Now those are some perfect lines. I think that deserves a like on this video. Thank you guys. But if we do have a pullback into these zones, we could look to buy and target these previous highs here and here. Other than that, looking at the weekly, nothing really here on the weekly. The weekly is pretty much in a consolidation as well. So the only thing we can see is the last bearish candle here, which aligns with the lower time frame imbalance. So that could be important. And we also have this level of imbalance here, this small imbalance on the weekly time frame also can be important. So something to note. Okay, so here is the US 500, the S&P 500. And last week we can see that we continued to move up. We closed above the previous high here and we held above it. We didn't come back below. We kept closing above it and eventually made a new high. So we can see that this is our range now, our high, our low, and ideally we would see some pullbacks and we can look to buy again. But we have to see if the context doesn't change, right? Never marry your bias. And the Nasdaq 100, we can see that it's very much the same. Ooh, no idea how that happened, but here we have the previous high. We closed above it, and just like the S&P, we held above it. We kept closing above. We had a little consolidation above the high, so this could potentially be a level of support that could be important, as we discussed. A tight range would be better visible on this time frame. A tight range between these 2 points before we had this massive move up. So if we do get to this level, it could be an important level of support. and any confirmation entries from here could be very good. So here's the economic calendar for the upcoming week, starting with June 17th, Monday. And we're looking at investing.com for those of you interested. So starting with Monday, we see no high impact news. We have some smaller news, but these usually do not do much at all. So Monday, once again, take it a little bit slower likely, but obviously it could change. The price action could show you something very good. So be on the watch out, but be very careful and a little more selective and picky. So on Tuesday, things start getting a little bit more interesting as we have the CPI for Euro. So that's going to be a big event of the week during the London session, obviously. And for the New York session, we have retail sales and core retail sales. So Tuesday seems very packed so far. And there's a lot of medium impact news throughout the day as well. So Tuesday is going to be very good, likely. On Wednesday, we have the bank holiday for United States, or the holiday for United States. So banks will be closed, and this is going to make the New York session slower, or all the sessions, but generally it will affect the New York session most. And we have the CPI for British pound as well. At the end of the day, or depending on where you are, here in Europe, this is later in the day, 6 p.m., nearly 7. We have GDP for the New Zealand dollar or the Kiwi. So Wednesday seems to be focused on the pound, but have to be a little bit more picky. As we discussed, the pound dollar is very much disgusting. There could be better pound pairs, but you need to do your own research on that. CPI could bring some opportunity though. We will take a look at that next week. So on Thursday, we have the Bank of England interest rate decision. So last week's interest rate decisions all unchanged, stay the same. So we will see how the Bank of England rate decision goes and how it affects the pound. But it could very much use a big impulsive breakout, finally. And we also have some news for the USD. We have housing starts, we have jobless claims, and we have Philadelphia Fed Manufacturing Index. So Thursday is gonna be pretty good as well. A lot of medium impact news as well for all the major pairs or the currencies. And we also have crude oil inventories, which will affect the Canadian dollar and the US oil. And on Friday, seems that we do have pretty much nothing for the London session in terms of high impact news. But the market should be following up on the interest rate decision and the CPIs and all that. So there should be a lot of movement still. We have a lot of medium impact news for the morning session, for the London session. And for the New York session, we have existing home sales. So that seems to be it for the upcoming week. Let us know how you found this market review. Hopefully you found it helpful. You can leave any feedback, what currencies or instruments you would like to see discussed next. And I will see you in a week's time. Cheers.